Here's the thing. Are we doomed for a housing market meltdown? With high interest rates, stacking inventory, sellers not selling because of their low interest rate, long permitting time, new construction material costs, labor shortages, insurances, it's like, now what, right? Most of what's happening is a correction. Keep in mind, I'm not speaking about the national level, just locally here in Southwest Florida. There are some real challenges in the marketplace, but it's not doom and gloom that we are seeing in the news. What's up, everybody? Victor Prasad here, bringing you a Cape Coral housing market update. I'd like to take this time to go through a few different charts to understand where the market was and where it is now. Market trends is important to know whether our market is appreciating or depreciating in value. If we look at the chart for June of 2023, we can see where we were before versus where we are now. You can see the median sales price has dipped down. There is a combination of reasons here. In the past year, we have seen interest rates rise, insurances rise, Hurricane Ian, which had a huge impact on values due to the damage of some properties. The number of closed is also down. And again, for the same reason stated above, median days on market has increased, which means it's taking a bit longer for properties to go under contract. Generally, 30 days to close on a property is typical. Prior to COVID, this is all normal. List price received, this is normal as well. New listings is an interesting one because the number of new listings is less than what it was in 2022. And the monthly supply of 4.1 months, supply and demand at its finest here. 6 to 7 months of inventory is a normalized market. What we saw in the past 3 years is not normal. Based on the numbers we are seeing, we are still in a seller's market, but it may not feel like it because of the activity being all over the place, right? So the market is stuck. Basically, we've exhausted the second home inventory of people who are looking to cash out their equity from their home during the boom. In the past couple of years, the remaining sellers looking at why would I leave my current home for something else with double the interest rate, which really doesn't make sense for some of those home sellers, which means the only new inventory to sustain the demand we have is new construction. The challenge with new construction are material and labor costs, and permitting timeframes are all factors in the cost of building. We've seen some new construction properties that are halfway built and coming onto the market. Not as bad as it was in 2008, but still, the factors above play into the non-local builders who were trying to cash in that went bust. So now we're in a unique scenario where the demand is still prevalent. However, buyers are having their own challenges in order to make a move to our area. Again, interest rates, insurances, and affordability. From what I've seen, the number of apartments that are coming here to Southwest Florida and Cape Coral specifically will ease the demand of the rental market prices and should normalize the rental rates and increase affordability too in order to live here in Cape Coral, Florida. The median rental price for Cape Coral is $2,250 for a single family home. That's 3 bedroom, 2 bathroom, 2 car garage built in the mid 2000s on a non-waterfront lot. This is a pretty common rental home. So now let's take a look at the different type of mortgage rates that are available to us from conventional, FHA, and VA. Interest rates are where they were prior to the Great Recession in 2008. Take a look at these screenshots of conventional, FHA, and jumbo loans. Be sure to pause on the video so you can read the loan amount in correlation to the payments and interest. With all that being said, is Southwest Florida, Cape Coral still a good investment long term? The answer is 110% yes. We're going to take a look at this next chart by Fred. It's a website that studies all the data from the previous years of our real estate market here in Florida. So let's go ahead and take a look here. By looking at this chart, you can see that Cape Coral Fort Myers as a whole has sustainable equity increases year over year. The longest period of time that we see values dip and come back up is from 2006 to 2016, a 10-year cycle before it surpassed the previous value. The difference between 2006 and 2021 economic boom is that one was a bond market failure. This market is by far different than the mid-2000s boom. Recorded in the Southwest Florida Journal is that Florida has seen a migration of 600,000 people during the pandemic year. That number is expected to continually rise. We have the largest population of baby boomers moving into the Florida market with paid off homes, pensions, and retirement, where their money is going to go a lot further than the states that they are coming from. What does all this mean? Well, we have a strong demand for Southwest Florida and Florida as a whole. What should we pay attention to? Interest rates 100%. If they dip by 2%, our market will be back on fire again. If they do not, we will be waiting for the new construction homes to come to the market to replenish inventory and to get caught back up if nothing else changes. Once the inventory is caught back up, assuming interest rates are here to stay, then we should be seeing stability in the market for home pricing, insurance, construction materials, labor pricing. Then we should see a normal market. Thanks for watching. Hopefully you found some value in this video. If you're thinking or even considering relocating to Southwest Florida, be sure to call, text, or email me. I'd love the opportunity to connect with you. And if you want to know more about working, living, playing here in Southwest Florida, then if you haven't already, be sure to smash that subscribe button, click that bell notification so you're kept up to date with the latest content. Thank you so much for watching, and as always, I'll see you in the next video.